What is up, guys? Welcome back. In today's video, we are going to be talking about price action. So what is price action? Basically, when the market's head to the upside, you're looking for some higher highs and some higher lows. When it's headed to the opposite direction, you're looking for some lower lows and some lower highs. So for example, when we draw, I'm going to draw a basic price action. Basically, when you have this on the chart, basically it's to the upside. So this high is higher than this high, and this low is higher than this low. So the price action is going to be to the upside, and your entry point is going to be here because this high, well, once you have this high, or once you have this high higher than this high, more than likely this low is going to be higher than this low. So knowing that, we can use that to our advantage, right? We're going to use this right here in this particular situation. So we had the market break down the trend or break the trend, and now the market's head to the downside. So you're looking for some lower lows and some lower highs. And so when we go ahead and zoom in to the 5-minute, we find multiple opportunities to get in short and make some profit off of this. So you can see that this high is lower than this high. So once we establish a nice resistance level with that, this one got respected multiple times. One here, here, here. That one came close. So that's a good area of resistance. That's where you're going to get in and you're going to short it, right? See, for me, I would have shorted there and would have taken it probably up here where it got broken. Hold on. Where it got broken right here. See, it broke resistance, and now that resistance becomes support, and then it starts bouncing off of that. But let's say you missed that area, right? So you would just find different areas here. Let me go ahead and change my tool. You would have found different areas here where you could have taken that chart to the downside. We're going to zoom in. Let's say you missed that, right? That would have been another opportunity to get into the trade. Came close to it. Right here, we had not that much of a movement, but when we zoom in a little bit, we see that price action got broken down. You can see that this low is lower than this low, right? And so you can see that that's an area of interest, right? You would have taken that to the downside. And so you see this high is lower than this high. So that's your opportunity to get into the market. Right? There's so many different opportunities when you're using price action. Hold on. But yeah, there's so many opportunities that you can use price action. So you can see this low, it made a new low. This low is lower than this low, and this high is lower than this high. And so this right here would have been a good opportunity to sell short, taking that to the downside. This one as well, you can establish a nice resistance level there. And here where it gets respected the most. Got multiple touches there. That's your selling opportunity. You're taking that to the downside. This one made a lower low. So once it hits a nice resistance level up here, you can take that to the downside. And so, but that would have been a short position, like a small movement type of thing. But yeah, basically that's what price action is. Basically, when you have the market moving to the upside, it's making higher highs and some lower lows, or not lower lows, but higher lows. And when it's going down, you're looking for some lower lows and some lower highs. So yeah, that being said, if you have any more questions about this, go ahead, keep sending those questions. I'm gonna try my best to answer them. And yeah, basically, that's it.